Sometimes something feels off in your business, but you can't quite point to it. The revenue is there, the team is busy, but the margins are tight and things feel heavier than they should. And growing isn't translating the way it should as well. That's not random, that's a signal. In this upcoming episode of Profit with a Plan, we're breaking down what's really happening inside a business that needs turnaround and how to fix it before it costs you time, money, or momentum. We're talking about hidden gaps in operations, leadership, and structure that quietly drags performance down, and what it takes to reset your business so it runs cleaner, stronger, and more profitably. If your business feels harder than it should, then this conversation you don't want to miss. Hey, entrepreneurs, are you working too hard for too little profit? Well, welcome to Profit with a Plan podcast, where we help you scale smarter, increase profitability, and build a business that's worth more, whether you keep it or sell it. I'm Marcia Reiner, business growth strategist and the profit booster behind Infinite Profit. I've helped countless entrepreneurs to turn their businesses into highly profitable and sale-ready assets, so they enjoy more income now and a bigger payday later. So join me for practical strategies, expert insights, and proven steps to make your business more profitable, more valuable, and built to last. By the way, today's episode is sponsored by Infinite Profit, where we don't just talk profit, we deliver it. But before we dive in, I've got something special for you. If you're tired of flat revenue or marketing that just doesn't seem to pay off, the new Profit Booster Growth Map, it might be for you. In just a few minutes, it'll show you exactly how to bring in more qualified clients and plug those profit leaks that are eating away at your cash. Get it for free right now at profitbooster.biz/growth map and start turning missed revenue into real money. All right, let's jump into today's episode. Today's guest brings a perspective most founders don't get until things go sideways. Jay David has built a career stepping into businesses at their most critical moments, fixing broken operations, stabilizing performance, and leading full company turnarounds. With a background that blends finance and operation, he doesn't just look at the numbers or the systems. He connects the two to rebuild how a company actually runs. Now, as the founder of Do Business Better, he works with founder-led companies to strengthen their growth model, elevate teams, and help the business evolve beyond founder as the center of everything. He focuses on simple but powerful, and take a business that feels heavy, complex, or underperforming and turns it into one that runs with clarity, accountability, and real profitability. Jay, welcome to Profit with a Plan podcast. I'm so excited to have you here. And if I can get my mouth to work today, we'll be doing a whole lot better.
Thanks, Marcia. I think that was the best introduction I've ever had. Thank you very
Ah,
much.
thank my boyfriend Chat GPT to help me, fine tune it and get it where I can speak it normally.
We all spend too much time with old Chat GPT, so
I I know, right? Okay, so the history tells us here, or your history tells us here that you find turnarounds, but people don't often fall into a turnaround business. How did you get into this?
um, I've approached it going way back into 1988. I was in the restaurant business before I went to college, believe it or not, and I was handed a failing location in Chicago. The service was not good. It was a dirty place. Hadn't made money for years, and it was one of 28 locations. I had a relation with the district manager. He begged me to come, and I went in and we turned it around and restored profitability, restored sales, cleaned it up, and then at some point during that journey, I realized I didn't want to work in the restaurant business forever. Uh, I went back to college and got my degree in accounting, but that was my first experience with turnaround. And really, every enterprise I've entered since then has been failing in some form or fashion.
I
And
think it's a
that's what
pretty
I
common
find that I
thing.
enjoy. Yeah.
When you think about turnarounds and turnarounds are happening in any phase of the business, but when something just doesn't feel right and it's not working to their best, you come in and you fix it. And that's what a turnaround is, at least what I understand. Now, there's
Yeah.
bigger turnaround companies, right, that'll come in when it's on its last breath and fix it or tear it to pieces and sell it out that way. But I think what we're talking about is just fixing the company so it runs better, right?
Yeah, like I mentioned in the restaurant, it was service and cleanliness, but I've been into businesses that can't manage their accounts receivable. They've got old money sitting out there. They can't figure out how to get it. Their payment terms to their vendors doesn't equal the payment terms from their customers, and a
Hmm.
lot of things like that. So you get in and you find kind of what the problem is. Usually the outcome is cash flow, but it's the root cause of what's causing the cash flow that you go in and investigate. It's inventory or it's cash collections or any number of things. So you always have to dig deep to really find the method you're going to use to fix it.
So speaking of digging deep, how does let's take a step back first. When do we start to think it's time for a turnaround? Is there any kind of blaring signal that comes out, or is it often something really soft that maybe we're not realizing?
Well, I'll tell you, it's too late if you've already missed a payroll. So uh, you don't want to wait too long. But when you start to have repeatable offenses, when you continually ship late, and one of your big customers is considering leaving,
Mm,
if you've got continuous safety issues in your plant, and early on you make excuses. Well, that was a one-off, that shouldn't have happened. But then all of a sudden you have three or four that roll up in 6 months. It's time to react. And the excuses are usually defense mechanisms for people not wanting to get in trouble. But when you really start to look at it, and if you have a good communication structure in the business, somebody needs to step forward and say, okay, we need to stop. We've got to get back and address these. Customer leaving, a lot of times the salesperson says our prices are too high without noting that we ship late 50% of the time and cut half of their order. So, again, the truth is usually hidden in a lot of small individual transactions rather than one big event.
yeah, that makes total sense. And like you said, there could be one-offs, yes, but when it starts to happen and you notice the domino effect, right? Where
Yeah.
clients start to leave or situations become repetitive, then that's the time to really go, hey, let's stop, let's take a look at what we're looking at. So now when we're
Yeah.
looking, what do we tend to look for? Where do we go digging first?
What I do when I enter a business like that, whether I've entered as an employee in leadership or as a consultant, I do interviews with the owner founder and start to find out from them their perspective of what's going wrong. Then I go to the vice president and director level and hear their side. I go to the supervisors, warehouse personnel, factory people, and then I kind of triangulate everything together. That, depending on the size of the business, that can be a full day or it can be a full week. Then I kind of bring it all together, and then I have that very difficult conversation with the owner founder and say, here's where you thought the issues were. Everybody else seems to think they're coming from here. What I've been able to do is kind of boil it down into three or four things, and let's talk those through. And it's a very sensitive conversation because a lot of the times the founder, he takes offense, or they
Right.
say, well, they don't, how would they know what they're talking about? And perception is reality. If the employees perceive that there's no safety programs or that quality is not important, that's a fact.
Mm.
No matter what everybody else says. So that discussion leads to maybe a top three or four items that we can go after. And I always propose the one low hanging fruit. And it it is something to shock the organization and wake it up. And it usually involves the hourly employees.
Mm,
The vending machines in the cafeteria are terrible. The product in them is awful. The air conditioning in the factory hardly ever works. So normally that's one of the top 4 or 5 things I say, let's fix that today.
mm.
Let's get that set. And then everybody sees, okay, change is coming. And then they're more receptive to it. So when you go out and ask them to do something hard, they'll nod their head and say, okay, I'm on board because I can see positive things happening.
So that's great. And I love how you're using the factories as an example. This is the same thing can be told for services or delivery of services
Mhm.
or tech or SaaS or anything along that. There's still always going to be
Yeah.
that visual trail of problems that are causing them. But let me ask you a really honest question.
Mhm.
Does the when a company starts seeing problems, do they need to go out and hire a turnaround specialist immediately, or is there something they can look at themselves maybe that can start to do it? Now I know, they always have those rose-colored glasses, but can they
Yeah.
try and do some things themselves first?
Yeah, absolutely. I mean, you start to self-reflect and a lot of times it's just the problems are known, but they just aren't bubbled up to the top. So a lot
Mm,
of times it's the CEO or whoever's in charge that they come forward and say, "Hey, guys, I we are struggling, and I know maybe I've been leading and you guys have been following. I need help. Let me know, and I'm now open to hearing your ideas and your solutions."
mm,
And I reference that a lot in my book, and it is about building a management team that can productively argue in a conference room, that every idea, every plan gets beat up and bruised a little bit before it's agreed upon. The term I use is creative abrasion.
Ooh, that's
So
good.
the somebody puts it out there, if everybody's nodding their head and it just passes through, there's probably trouble on the way. But when the door's closed, that management team should be able to push and ask questions and say, "Did you think about this?" And usually, the people in the building can come up with the problem as long as people are ready to listen, because everybody usually knows what the problems are.
We all know that problems are going to be constant in business, right? I mean, nothing's easy, nothing's smooth, there's always going to be a little bit of friction. But is there a boiling point that we start to bring people into the room? I mean, ideally we should be looking at the improvement of your systems and processes and everything. Ideally, I say that in
Yeah.
quotation marks because not everybody does it, but on a quarterly
Yeah.
basis at least you should be having a review of your systems and processes. But let's say they don't. um do we have to wait for it to boil up for it to get there?
No, I do a lot of writing of other topics, and the concept of budgeting and zero-based budgeting and all of that forces a deep dive on certain things. My
Mm.
problem with zero-based budgeting is it's usually all encompassing and everybody is scared and they have to justify every paperclip. But to when you identify an area of opportunity, to take a deep dive in there and break it down to its core, that is a healthy exercise. It shouldn't be an intimidation. It shouldn't be the fear where people are going to say, okay, they're going to cut 10% of us and send us all home today. But it's an objective deep dive that says, why are we still doing this? I
Ah.
found in the past a lot of times, hey, somebody's building a spreadsheet. I've been building the spreadsheet for 6 years and I email it once a week. Who's reading it? I don't know. So the direction that I give, and again, when I've been within companies and coming from the outside, is stop emailing it for a week, see what happens. And
Mm.
you start to find that there's a lot of redundant work that used to get done. Nobody knows why it's continuing. So that's why you do those drill downs. So again, going back to accounts receivable, what's the process that we are supposed to have? Where's the breakdown? And a lot of times it's like, oh, Sally was our accounts receivable clerk. She used to be a bulldog and really got after things, and she left, and we replaced her with somebody that wasn't experienced. And so usually you get to root cause and you can really figure out what the solution is much easier there.
Yeah, this is important. I think it takes that reflective, viewpoint of what are we doing, and then, un associating or disconnecting the
Yeah.
emotions of this is my baby, right? And
Yeah.
being able to objectively look at the business. And it sounds like, when we're doing a turnaround, that's because it's gotten big, right? It's become
Hmm.
a significant problem instead of just a little thing, right?
Yeah.
And to avoid those, if it sounds like, and correct me if I'm wrong, that if we do these little checkpoints along the way and we start to figure why things are breaking or why things are not running as smoothly as they could, you could avoid this altogether, the turnaround.
Yeah, and my book is called Turnaround Revelations, but I write on every subject from organization to the numbers to operations to sales to everything. And I said, if you haven't understood it by the end of the book, the goal of this book is not to show you how to turn around your business. It's to give you all the right tools proactively to help you avoid the turnaround in the beginning.
Okay.
So that's really what it's about. But if you need the turnaround, here's the process I use on how to do it. And
Mm.
you can do it yourself. You don't have to call me, but I
It's
attack a
often
couple of
better to have
areas in there directly.
an experienced person that's there that can be objective and tell you the way it should and really be able to go in at an arm's length rather than, being knee deep into the problem trying to dig your way out. So I'm a fan of
Well,
using outside people, but it's like oftentimes people won't jump to the outside person. They'll try and fix it themselves,
yeah.
right? And that's why I brought that point up earlier is could they see those kind of points from the beginning,
Yeah.
or at
And
least earlier?
there's a huge value to the outside eyes. So, one client that I'm working with right now is a professional services firm, and they're struggling with revenue. And so I'm going in from the outside and saying, okay, your basic product that you're selling is billable hours. And your outcome is, the product that those billable hours create. And but you're building all of these costs into your billable hours, such as the cost of your building, very high priced principal people in the business, and you're not competing anymore. And you're
Mm,
sitting at about 40% capacity.
mm,
So, a specific instance where they put out a bid and they bid $1 million and it was awarded at $500,000. They weren't even close. So I
yeah.
said, turn it around and say, what is the market going to bear for this project? Go back and find out how much manpower you're going to have to put into it. And then ask yourself the question, does this make sense right now? And in their current situation, they need revenue. So I've encouraged them to turn it backwards and to do that and to kind of ignore the concept of the billable hour right now. Because their people are idle at some point because they're only at 50% capacity and they're paying them regardless.
Mm.
So, had you gotten that business for $500,000, that's revenue with no incremental cost. And that's where the outside eyes come in because they were stuck in that paradigm.
Hey, quick pause here. If you've ever wondered what your next smartest move should be to grow your business, well, I've built something for you. It's called the Profit Booster Growth Map. It takes only about 2 minutes, it's totally free, and it shows you exactly where you're leaving money on the table and what to fix first. Go grab it for free at profitbooster.biz/growth map. Then come right back to the episode.
Well, you know what? That's a really smart story, an example of where they're thinking you have to think differently, right? You have to look at
Right.
something, the bolts and screws and paper and people of the actual project, as well as the
Mm-hmm.
exterior of what's the competition going at and the structure of how you're forming your bids, instead of the
Yeah.
original, when someone has a revenue problem. you and I both know the next answer is make one more sale. Let's get on the phone, make more, sell more. And they're not
Hmm.
looking at what they're selling and how they're pricing it versus
Right.
versus go out and just sell more, right? Which is always the answer to revenue. Or we need to
Yeah.
market better, or we need a funnel, or we need we need AI, or whatever it is.
Well,
But it's
and
not
that's
like
a
that.
lot of what Yeah, and that's a lot of what I write about too, because of my finance background and moving into operations. Again, a chapter in my book is price does not equal cost plus desired margin. Price is already decided before you go out there. In the business that you do, you have to be considering competition. If I'm selling candy into the store, there's a price point that that candy has to be at. Doesn't matter what my cost structure is, that's the price. So my job then is to say, can I compete at that price? So then I look at my costs. And then again, I'm an advocate of saying don't include all of the fixed overhead costs, the cost of the building, insurance, depreciation. That's not part of your true decision making cost. Really, it gets into materials and labor, and that's really about it. Can you make money above that? Yes or no?
So then, question for you. So when you're looking at profitability, and I've always been a fan of, yes, we have to factor the fixed operating costs into our cost of goods sold, right? Into
Mm-hmm.
the price that we're charging. But I know that you're switching it on a different level. You're saying, can we be competitive just based on what it costs us to put out this widget or service? And that you shouldn't
Yeah.
factor in the cost of the building, but somewhere along the line on the bottom line profitability, you still got to factor in the cost of the building and insurance and all that other crap, right?
Well, yeah, GAAP accounting, generally accepted accounting principles, mandates that you embed fixed overhead into product cost to get to cost of goods sold.
But I think that that's like you said, it affects the actual um competition or the ability to compete in the market with that. How do we work around that and make sure that we're still doing the accounting processes, but yet we're still managing where that cost is so we can at least have that bottom line number that means I've
Yeah.
still got money in my pocket at the end?
Yeah, so generally accepting accounting principles force the allocation of fixed cost into product cost in order to calculate cost of goods sold. So everybody's doing it the same way, and that gets you to net income and everything. But that fully loaded product cost is not your incremental cost to make a decision to produce again.
Mm.
So when you add in your building cost, and I'll go back to this professional services firm, they have a very expensive building. They have chosen very good benefits programs for their people. They pride themselves on the tenure of the people that do the work in the building, but their clients don't necessarily want to pay for all that overhead. So the accounting says it's all in there, and then you come up to a net income number. But the decision is you can still set your own price, and the price is set to get the business. But then when you look at the risk of making that yes decision, you say, if I say no, I get no revenue and I don't incur any costs. If I say yes, I get revenue. And then you ask yourself, what are the costs of saying yes? In their
Mm.
firm, it's $0 because they don't have to hire anybody. In the candy business where I came from, it's the cost of the candy, the cost of the packaging, it's freight cost and commission, because I'm not going to have to hire any more people. I'm not going to have to rent a new building. I'm not buying new equipment. So if I say yes, I know my incremental cost. And I'm not saying that you sell it for a penny above that incremental cost, but if your margin is 50% above your truly incremental costs, go for it. But
Sure.
that if you look at it on fully loaded costs, the margin might be 5%.
Mm. Got it.
So that's what usually happens. And
Yeah,
that's why people
and
get
that's
stuck.
something that's a really good angle to look at. And when you're factoring in how competitive am I and the value that I perform, right? We can always go back and reanalyze what our operating costs are next go around, right? When
Mm-hmm.
leases come due or relationships or contracts come due, you can look at how you're pricing them. Um, I'm also a huge fan of innovation and how can we do this at a bigger, better, faster, stronger, cheaper, leaner way of doing it, how whatever the factor is that you're looking to do. And that's always really important. But I love the way that you said, hey, we got to really look at competition and can we land the deal? And if we could do the deal at that price, what is our profit on it and how do we factor in the rest of the items to it? So it's looking at it from a different viewpoint
Yeah.
instead of just the hard numbers, just the data. It's saying a $500,000, sale is better than no sale. Of course,
Yeah.
$1 million sale is good, but that $500,000 sale takes some pressure off of us that allows us to do more things.
Yeah.
And that's valuable.
Well,
It's
and I
a
think
unique
the
way of
term that I
looking.
would use is it's the cost of saying yes. If I say yes, what costs are going to fall into my P&L? It's the accountants and GAAP will say, well, the cost of the building, the cost of the insurance, your lease, everything there is no, that's not the cost of saying yes. I've already paid for those. I've already made a decision on those. That decision I made should not penalize my ability to say yes to the opportunity in front of me.
And I think one more point on that, which makes perfect sense to me, if you find yourself 3, 4, 5 months down the road continuously having to say yes to the lower sale price, then that's when it's time to reevaluate everything that it's costing you to operate your business, right? But
Yeah.
if it's a one-off or a two-off,
Well,
it's the it's the choice of yes.
yeah, it comes paired with when you have capacity, available capacity. So in your business, if you're only spending 20 hours a week and the other 20 hours a week you don't have anything to do, you've got capacity so you can be more aggressive on pricing. Once
Right.
you start to say, I'm working 7-hour days, 5 days a week, I'm getting close to capacity, you go back to the old business model and say, here's the price. That's it. And again, that's the coaching I'm doing with the professional services firm. Today, we price to the market. We don't care what our billable hour rates are. Once we
Mm.
get to 75%, then we look at the 5 best projects and we start to say, okay, which 3 can we sneak in the open capacity that we have and how aggressive should we price them? And
Yeah.
they're already seeing the benefits of that approach.
I can see it clearly as a bright sunny day. I mean, it makes total sense to evaluate what your capacity is and the opportunity that you do that. And I think that's where someone with your experience can come in and say, "Look, I'm going to look at this business differently than maybe you would, right? Because
Yeah.
of course you're following these instructions and those instructions, and we've done it this way all the way, right? We've always had billable hours, right?
Mm-hmm.
So it's like maybe it's time to do things differently. And I say this often. We're in this time of Amazon, right? Um, our buyers want it on our doorstep, yesterday at a discount, right? And
Mm-hmm.
and yet we're still trying to sell billable hours, right? We have to evolve the way our buyers are used to buying. And I think this is an experience
Yeah.
or a skill set that can take our business from being stuck in what we did and what we've always known to be true into a new model that could be financially beneficial to the company long term and even short term.
Yeah, I mean, everything starts, and again, I covered in the book, everything should start with a break even analysis, even a business like yours. What are my fixed costs? What are my variable costs of making those decisions? I have to travel. I have to do this. I have to print documents. I have to do something. With those 2 things, your variable margin and your total fixed cost structure, you get to your break even. So if you have a fixed cost structure of $1 million, I have, the break even analysis might say if I sell $5 million, I make $0, 0 cents. That's break even. So now
Hmm.
anything above the 5 million, falls to the bottom line. But if you're only selling four, lock the doors and shut it down because you're not making money. So the break even analysis is a great place to start. Then you can start making those decisions. You either reduce your fixed costs to bring that break even point closer, or you have to adjust your variable costs. But the easiest way is bring revenue. Get to
Mm,
that get to that break even revenue point, and you'll be
love
fine.
it. Love
Yeah.
it. This is really smart analysis because it's not Um, we're not talking about companies that are doing really well right now. We're talking about companies that are having problems, right? We're talking about
Mm-hmm.
what you do to fix the problems that you have so you can continue to operate and move it from a red into a black. I
Right.
mean, that's why we're talking the hard numbers here. And but in reality though, I'm going to take a step out there and say that every company has a little bit of this problem going on at all times, right?
Yes.
It's not just for the dying company that's ready to, hang themselves. It's for every company. There's an opportunity for you to take this kind of analysis and review what you're doing and see if you can do it better or see if you can fix something and improve it and make it
Mm-hmm.
better so that way you never get into a dire strait.
Yeah. I mean, one of the other things that I talk a lot about is the gap between operations and finance. Operations people don't understand the accounting calendar, accruals, allocations, depreciation. It's a foreign language to them. Just like finance doesn't understand when engineers are talking about OEE or PLCs and all this type of stuff. So one of my missions in life is, because I've got the dual background, is to begin. I'm building I call it Do Business Better Academy, but for any of my clients, they're going to have full access to this. And I'm building courses on operations finance, how to bring up the skill set of a plant manager or an operations person on what absorption means, what allocations mean, the importance of the fiscal calendar. Finances month end might be on a Tuesday this month. Their month end is here. Why it all matters. So when they're in the conference room together, they can engage rather than, I've seen a lot of operations people walk out of a conference room saying, what was that all about? I had no idea what they talked about.
It's a foreign language.
Yeah. So by bringing that up, and that's how I want to help founders to say, they're told all the time, well, just develop your people and pull yourself out and let them make more decisions. I want to be the one that says, I've got the tools to help you do that. So if you teach your operations people the core fundamentals of operations finance, they're on an equal footing. And then they also understand the downside of GAAP accounting. The income statement, you don't learn a lot about your business from the income statement. It comes 12 days after the month. It's looking backwards, and then everything's got an accrual, it's got timing issues and all this stuff. So you need not necessarily a second set of books, but you need to understand how costs accumulate, how they react to activities and things like that. And then you'll start to understand your business.
I like that.
So yeah, it's a lot more than just, looking at, I don't want to be mean, but a lot of people, the owners will say the CFO tells me everything, and and I live by that. Well, they're telling you the financial statements. They're telling you, that. But the income statement, if you say how much was the income statement affected this month by our sales mix differential from the budget that we wrote to what we actually made? I don't know. I guess I could figure that out.
Well, and
So
I
that's a
think
challenge.
that is a huge challenge is understanding the accounting of the business and how it affects and trickles down everything. But
Yeah.
I think when we're talking about this at a very deep level, which you're experienced at in the operation side as well as the financial side, but then again talking to the business owner, and we're not saying business owners are dumb, but they
No.
maybe don't have that skill set in the depth and levels that you have when we're looking at this, they do rely on their team. to give them
Mhm.
the information that they're supposed to do. But at a certain level, that owner has to be able to know what are the top 5 things I need to look at in that statement, not, rip apart it down to the whole piece on it.
Yeah.
And that's where the valuable team members, whether they're internal or external, can really help you make those decisions and
Hmm.
and saving a company from potential disaster. I mean, the last
Yeah.
thing we want to do, we built a company, we birthed our baby, we grew it up to a teenager. It's having its teenage problems or its, midlife crisis or whatever it is. And it's time to fix those. And we can only fix those when we know what the data says.
Yeah. And it gets into, again, educating everybody. Your head of sales should be the one that's talking about how the effective product, the product mix that you sold impacted the business. But everybody tends to cross their arms and wait for the CFO to tell them. And if you educate everybody about the finance side of their business, it's going to be a much better team approach. And rather than the owner having to ask, what are my challenges this month? If he's got that team that is well versed in the finance side of the business and how their actions impact the P&L, that management meeting at the end of the month is going to be much more valuable because they're all telling him, it's not just the CFO.
I like
Um,
that. It's kind of like they're
and
running their own little company, right? So they need to
yeah,
know their financial reporting on each department, right? So that's
yeah,
good. All right, Jay,
exactly.
this we can go on a long time about this information and yeah, it can be dry sometimes, but it's essential, right?
Yes,
And it's looking at those holes that are filling with water, and if you don't take that bucket and shovel them out, you're all gonna drown in it.
yep,
So I love the fact that we're looking at it from a different point, and each department has to have a financial pulse on what their department is doing to make everything work better on it. So I really like that.
exactly.
But knowing all that and knowing that there's going to be times anytime in a company where this is an important time to review, where can listeners find out more about you and your build better business? I
Almost.
I, I choked on it. Sorry.
Yeah. Uh, I can be reached at dobusinessbetter.com. That's my website. And on the website, I have what I call the founder's journey. It's an assessment for business founders. Takes about 10 minutes. They ask a bunch of questions, and it gives them an evaluation of where their strengths and weaknesses lie on their journey. I define the journey as moving from a business that is mine to ours to theirs.
Ooh,
And
good.
once it's to theirs, then they can start thinking about selling it or transferring it to a family member. I do have a book, Turnaround Revelations, and anybody that is listening to this podcast, if you send an email to me, it's j.david@dobusinessbetter.com. I'll send you that link for the assessment. I also have my audiobook coming out. As soon as I figure out how to email an audio file that big, I will email you the audiobook for free also.
I love it. I think I can help you with that one offline. So we'll
Good.
get that one dialed in for you. Jay,
Thank you.
this has been really, really good information. And remember, listeners, turnarounds don't have to be when the business is actually, got one the heartbeat is failing dramatically. It could be little phases along the way. And I'm a big proponent, and I know Jay is too, that fix these things before they turn into a mess. Right. And so I would definitely encourage you to get the book, learn about the gaps that you have in your business and how you might be able to improve those today and not wait until they're dying on it. So this is really great stuff. All right. Thanks for tuning in today. I hope you found some valuable insights and actionable ideas that will help you make your business more profitable. And that's anytime we were going to do this. So definitely go get Jay's book and information in his audit. And before you go, I'll remind you that if you're ready to bring in more of the right clients and keep more of the money that you earn, go grab my free Profit Booster Growth Map. It pinpoints the top 3 growth moves to help you boost revenue and stop those profit leaks fast. You can get it anytime at profitbooster.biz/growth map. And while you're at it, don't forget to subscribe to your favorite podcast channel. You don't want to miss future shows. And we're looking forward to more profitable strategies on next week's show. So until then, make your plans and profit with them. Thanks so much, Jay.
Thank you, Marcia.